check.
And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
Good morning and welcome to the show. Of course, it is Thursday as we get ready to wrap up this week. Of course, headlines this morning: Russia invades Ukraine. You're going to see this on every channel right now, of course, with interviews and all kinds of analysis about what happened overnight. About 5 a.m. this morning Eastern time, Russia did actually launch attacks onto military installations. Now, so far they haven't targeted any civilian populations. This is simply military operations. Vladimir Putin saying this is a military operation only, and they are doing it in defense of their rebel, these kind of rebel separatists that they've been working with over the last few days. So, this is kind of that first step. Now, markets are going to open sharply lower this morning. We'll be down roughly about 2% on the S&P, almost 3% on the NASDAQ, down about 700 points on the Dow this morning. So not surprisingly, a very negative reaction to markets on the back of this news. Now look, headlines are going to be unfolding all day long. There's explosions going on. We're going to be getting more details this morning as things evolve. But again, this is kind of the unthinkable at this point, but is not something that we haven't seen happen previously. And going back in history and looking at financial markets and how they responded to, invasions like this. In fact, in 2014, February of 2014, Russia invaded the Ukraine, and that was the actual bottom of the market. That day was the bottom of the market. Market started rallying the next day because people started to assess very quickly the impacts and where the opportunities were in markets. The other side of this also is that this is going to certainly push the Fed now to become much more dovish in the short term. There was a lot of expectation that come March, the Fed was going to hike rates to battle and combat inflation. But now with the situation with the financial markets potentially creating financial instability from the attack in the Ukraine, we certainly wouldn't be surprised here to see the Federal Reserve start to act more dovishly here to provide support for financial markets until we get past this situation of however long it lasts. So again, there's going to be a lot of headlines this morning, a lot of news that's coming out. Markets are going to have to work through this. But importantly, yesterday, markets did close right along support lines yesterday going back. Now, we're going to break solidly through those this morning. Again, the NASDAQ right now is looking to be down about 400 points right now. The S&P 500 will be down about 102 points. So if we open down about 100 points on the S&P this morning, that's going to put the markets right around this very critical line here where we start getting into areas of territory that are going to start to trigger potentially margin calls and other aspects to markets. Again, this is why the Fed is likely going to start to step in here, become more dovish to help support financial markets in the near term. Markets are already extremely oversold. We talked about this yesterday. The markets have already been under a lot of pressure leading up to this event. So this could be that capitulatory event that you see in markets as well. So the one thing here that we want to be careful of is not to overreact. Now, the first inclination this morning is just going to be to sell stuff at the open. And again, this is going to be kind of that moment where the markets are going to capitulate. There's a lot of algorithms right now just triggering sell signals here pre-market. So the first inclination is going to be to sell stuff at the open. Be careful with that because that could very well kind of mark the low point for the day. Maybe not, again, but this is one of those things we're going to have to work through here for the next few hours, in particular in the financial markets. So just be careful about making knee-jerk reactions to markets here and starting to sell a lot of stuff. Now, on the good side, I guess on the more positive note out of this, if you want to call it that, is that fixed income, or bonds actually, will start to rally very well here today. Yields are dropping sharply this morning, not surprising. Again, kind of that flight to safety that you see in times of geopolitical crisis. People with money around the world, they want to be in the most safe haven of assets, and that is the U.S. Treasury bond. So this morning, we're likely to see Treasury bonds rally pretty sharply here, yields dropping as well. Kind of that, again, we're in the midst of that risk off trade. This is, kind of the one thing that we've been talking about here a lot lately is, what happens when the market makes a shift to risk off. This is what's happening. And even today, for the first time, one thing we haven't seen here lately is really seeing some of these other commodity type assets like gold, as an example, has not really been performing, despite the fact we've had just kind of several days of worry about what's happening in the Ukraine. Of course, gold really hasn't been responding all that well. Well, this morning we're watching gold actually kick up about 2.5% this morning. So you're going to see gold rally this morning. You're going to see oil prices rally this morning as well over concerns about restriction of supply. Lots of stuff going on here. So again, kind of just moving pieces, very fast here. Things are happening. So again, as these headlines come out, there's going to be lots of volatility in the markets this morning. Try to remain calm. Just pay attention to what's, kind of the overarching picture. Take a look at your portfolio. Where are the areas of risk? It's okay to reduce risk, but just be careful. Again, the one thing we're going to see this morning as we continue to see these kind of, exacerbated moves in markets. Again, you have a very sharp open this morning in gold prices. It's going to be extremely extended above long-term moving averages. Markets are going to be extremely extended below moving averages today. So you're going to see this real bifurcation in markets. And the point about that, one more time, is just to suggest that, this is what happens when, some unexpected exogenous event impacts markets. And, this is the one thing that we've talked about numerous times previously, is that, even with the Federal Reserve involved and with things that are going on, it's always that unexpected event. When you're looking at markets and markets are rallying and doing great, it's easy to kind of get lulled into the sense of complacency. But it's always that unexpected exogenous event that, nobody's counting on, that really trips up markets and creates these very sharp sell-offs in the markets. And again, we're going to have that this morning. But now what we need to be thinking about is what happens next. So, this has happened. We can't do anything about this right now, but we need to be thinking about what happens next. If the Fed becomes more dovish to help support financial markets, that should provide some support under stock prices. If we begin to see some breakthrough here, some positive good news on the front of Russia starting to calm down, back up a bit, starting to see some negotiations opening up, anything that shows some sign of good news, that's going to help support a reflexive rally in the markets. And this is really kind of the key point we've talked about for a while, is that with markets very oversold, it won't be surprising for markets to give us a bit of a reflexive rally here. Not a lot potentially, but enough of a reflexive rally just to let you exit positions and rebalance the risk in your portfolios accordingly. Again, this morning, markets are going to open down very sharply lower. And again, the first inclination is going to be an emotional, kind of get out of everything type move. Be careful with that, because typically we see markets rebound from these type of situations, maybe for a day, maybe for 2 days, maybe for a week. But we typically see a rebound from these very exacerbated moves that we see, and that gives you a better opportunity to reduce risk in your portfolio. Now, look, we've got a lot of stuff to get into this morning. We'll get into more of the headlines of what's happening out. We'll talk about the Fed. We'll talk about a lot of stuff. Michael Lebowitz joining me this morning as well. So we're going to kind of go through this, talk a little bit about what happened previously in history when we have these type of acts, and we'll get back and talk more about markets and your money right here on The Real Investment Show. I'm your host, Lance Roberts. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
FAFSA. It's It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next Lunch and Learn on college planning and dealing with FAFSA season. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. realinvestmentadvice.com. Click on the insurance tab.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Welcome to the show this morning. Of course, like I said, you know, it's every channel you turn on right now is going to be talking about the Russia attack of Ukraine this morning. Michael Lebowitz joining me as well to kind of go through what we know so far, and potentially kind of what, you know, theoretically happens next, and, you know, how does this impact markets, and what does history tell us about attacking markets? And this is, you know, we've got a lot of things that have been going on lately, not just with this, of course. There's been lots of concern in the markets about the Federal Reserve hiking rates because of inflation, right? We've got this big inflation push going on right now. That's going to be exacerbated a bit by what's happening in the Ukraine as well. Concerns over, you know, restriction of oil supplies. Russia is a big producer, part of OPEC Plus, and I guess there'll be OPEC minus after this one, but this is going to potentially add to the inflation problem in the near term. So the Fed's in a very tough spot here too, in terms of, you know, how do they respond? Do they, you know, focus on geopolitical risk and financial instability and, you know, just let Americans suffer with inflation for the time being? How do they approach this? So again, lots of stuff going on right now that we've got to kind of parse through, but this is going to be an unfolding event all day long, all week long, into next week. This is just going to be something we have to continue to kind of evolve with and deal with and make decisions, you know, as we can. So, Mike, good morning. Welcome to the show.
Good morning. We got a lot to talk about today.
Yep. So I'll just throw it to you, just kind of let you start. What are your first thoughts?
So one thing that I've been struggling with, and we've talked a lot about this, is the market is down roughly 15% from its highs. So the question is why? Is it Russia? Is it the Fed? And I think that a lot of the reason the market's been down is the Fed. Recently, Russia and the invasion is certainly adding on to that. So the question always in the markets is what's priced in and what isn't. And there is no definitive answer to that. Everyone has opinions, and there are at times ways to actually quantify it. Like you can quantify what the market is pricing in regarding what the Fed will do with Fed funds. But when you start talking about more nebulous things like war, like invasions, geopolitical, just regular politics, a whole host of other items, there's no way to understand what's being priced in because the ramifications are unknown. There is an old saying that says you always sell on the war drums and you buy on the boots crossing borders. And it sounds crazy. I know it sounds crazy, but what we've seen in the past is that markets fret going into a invasion, a war, and they tend to rally during a war. Mm-hmm. Does it make sense? I don't know. One reason that you could make an argument is that the government starts spending heavily for the war and consuming a lot of goods. And look, the war is not happening territory. So yes, it may affect consumer sentiment, but it's not going to impede people from going to the store, buying stuff online. We don't, what we import from Ukraine is next to nothing. That said, Russia is the world's largest energy producer, all types of energy, not just oil. So, there's an inflationary aspect. And look, crude oil is up $6 or $7 this morning. It was over $100 at one point earlier this morning. That will have a big effect. And this is what makes it so tricky is the Fed. Mm-hmm. What's the Fed going to do? One thing, if there was no inflation, I'd say the Fed's just going to back off. They'll say, we're just going to let Russia simmer down and we're just going to not do anything in March and we'll just see what the situation is. And that's probably the prudent take. The problem is inflation's running at 7.5%, a level we haven't seen in 40 years. And there's no indication that it's going to slow down when we get inflation data in 2 or 3 weeks. Mm-hmm. We just had a housing number that showed Case-Shiller's up almost 19% year over year. That's a third of the number right there. Oil is still climbing pretty rapidly. And, like we talked about earlier, when you start looking at year over year, you look at last year's numbers, and those, I believe, are still negative. They'll start rising come March, April, May, but there's no reason, we should expect the year over year number that we get in the middle of March to increase from 7.5%. So the Fed has to fight inflation, but at the same time, they're dealing with an event that could have some pretty severe consequences.
Right. Well, and again, and this is kind of the important thing because, as we talk about this, and you bring up a good point is that historically markets don't know how to deal with the threat of an invasion, but once the invasion occurs, they know what they're dealing with. It's like, okay, now I see what's going on, and then markets start kind of moving money into those areas. And again, Russia invaded the Ukraine back in 2014. The market was selling off in January of 2014 and had a very sharp down day the day of the invasion, and that was the bottom. And then the market rallied for the next several weeks coming out of that as markets began to kind of, reassess what was going on and what was happening. Of course, what the Fed would, what was going to happen with monetary policy, not just domestically, but but globally, right? So, we're going to be looking not just to the Fed here, but also the ECB, the Bank of England, Bank of China. What are they doing in terms of liquidity? So there's an expectation here that, and again, everybody kind of gets on one side of the boat, and that's kind of where we've been here lately. And now the initial knee-jerk reaction this morning is going to be for everybody to sell everything. And the one thing that Mike and I have been talking about lately is that really, despite this correction that we've had so far in the markets, and again, we're only down about 11% as of yesterday. Now we're going to be down 13, 14% today, depending on, the NASDAQ will actually be down 20% today. But the one thing that we haven't really seen here is a big, rise in fear, right? So the volatility index has been up, but it's not been spiking during this kind of correction event. It's been a very orderly correction up to this point, and that's something the markets needed. We had this big rally last year. So we were going through this correction process. It's been very orderly until today, right? So today is going to be the day that you actually potentially see that capitulation in the markets. You're going to see this just market's going to kind of open up this morning. It's going to be down very sharply. And then what happens next is going to tell us a lot about what we need to be doing in portfolios, right? Does the market start to immediately recover this morning? Or does the markets open, sharply lower and then just stay there all day or even go lower? That's going to, how the market responds through the end of today is going to tell us a lot about how institutions are positioning for this, what markets are doing, how much has already been wrung out of the market, how much has already been built in because of this. And then we can start making some decisions about what to do next. And the thing that, we always come back to here is, to make sure and don't let emotions override the investment discipline process. Look, Mike and I are both emotional people just like everybody else, and our first gut instinct is, oh my gosh, let's sell everything and we'll figure it out later. But that typically also comes with the fact that you wind up selling the exact bottom of the market along with everybody else. And, so this is the thing we want to be careful of, is not allowing our emotions to extrapolate this event into much bigger events. And look, I'm already seeing stuff on Twitter of people going, this is the first step to nuclear war and kind of geothermonuclear warfare. It could certainly go there in the worst possible situation, and we'll all be living in bunkers, and the markets won't even matter at that point anyway. So that's a concern that you just need to set aside for the moment and just think about what you need to do with your money to get through this period, and then we can figure out what to do after that. And look, you could literally sell everything in your portfolio today. It's okay, right? And then the markets kind of rally here for the next couple of weeks, and things settle down, and then you can say, okay, look, that event is past us. Now I can put money back in the markets. And look, you may miss some coming off the bottom of the market. That's okay. The markets, the media has gotten us all tied up in this idea that we have to time the markets perfectly. We got to get out at the top, we got to buy at the bottom, and that's, and that's not the way things, really work. And it's also not the way you have to work. It's okay. If you just want to get out of the markets for a while and just let this pass, that's okay. You'll have an opportunity to get back into the markets later. It may be at a higher price, it might be at a lower price, who knows? But you'll have an opportunity to get back in the markets later. So, just try to, see past, today's event and to say, okay, now what am I going to do next? Do I have cash sitting on the sideline waiting for an opportunity to put to work? Do I have positions in my portfolio that will perform well even in this event? This is why Mike and I have been talking about adding bonds to our portfolio. We've gotten a lot of grief lately about adding bonds to our portfolio because interest rates are going up, right? But we were saying, look, bonds are going to be a safe haven if something goes wrong. And, well, here we are, and bonds should perform very well today as that rotation from risk into safety starts to occur. So these are just some things that we can think about. Now, when we come back from the break, I do want to switch gears and talk specifically about the Fed. Now, Mike already kind of mentioned this a little bit, but historically speaking, if there's going to be a piece of good news here, to help support financial markets, that'll be something coming out of the Federal Reserve saying, hey, we're watching this geopolitical risk very closely and we're paying attention to it, and that is our primary focus right now. That could certainly provide some relief to markets in the short term. Be back. We got more headlines for you. Don't go away.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
FAFSA. It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual lunch and learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next lunch and learn on college planning and dealing with FAFSA season. Realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. Realinvestmentadvice.com. Click on the insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
I did win the Super Bowl bet yesterday.
You did?
Yes. My wife was in the kitchen cooking. And She says, I'm rooting for the Bengals. And I was like, okay, I'll take LA. I go, what are we betting? And she goes, whoever loses cooks dinner all week. Nail-biter ending, LA wins.
The Real Investment Show podcast.
I got up this morning and said, so honey, I'll be making my menu out. She goes, they only won by 3. I go, that doesn't count.
At realinvestmentadvice.com.
Sorry, doesn't change the facts.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual lunch and learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So if you're just joining us this morning, it's of course Thursday morning as we wake up to explosions in the Ukraine as Russia invades. And this was kind of the one thing that nobody wanted, and markets have been selling off in anticipation of this. And of course, this rhetoric has been ramping up for the last several weeks. A lot of inaction really by the Biden administration in terms of should have been imposing sanctions, long before we got to this point. But now this morning, the administration is going to meet with other G7 countries about applying very strong sanctions against the U.S. against Russia this morning because of this act. Russia. So let me just read you some headlines. These are changing almost as rapidly as we're reading them out. But Russia is attacking Ukraine's military infrastructure with high precision weapons. This was according to Russian media. Russia says it's targeting Ukraine anti-aircraft systems. They are not attacking cities and civilians. This is a high precision strike on Ukraine military. Zelensky says Ukraine is introducing martial law. Ukraine imposes martial law across the country. There's no threat to, according to Russian, and then actually according to Vladimir Putin and a statement he made, there's no threat to the Ukrainian population. This is all military action. So, that's, and this is ongoing as we speak right now. There are explosions that are happening in Ukraine. There's reporters standing out, missiles are flying overhead. So tanks are rolling down the streets at this point. So this is a full-fledged invasion at this point. No way to put it. This morning markets are, because of that now, markets are going to be off sharply this morning. S&P is going to be trading down about 2.5%. NASDAQ will be down about 3% this morning. Dow's looking to be down about 825 points right now at the open. So again, as this is unfolding, markets are under extreme pressure this morning. Bond yields are falling sharply. They're going to be down to about 1.87% this morning. Now, remember, we were just over 2% just a few days ago. So a sharp reversal in yields as we get this kind of risk-off trade from equities into U.S. Treasuries for safety. And this is also going to bring into question, as I said just before the break, the question now becomes, what is the Fed going to do? Because the Fed was set, just a couple of weeks ago, we're talking about the Fed set to hike rates by 50 basis points at the March meeting, tapering their balance sheet sharply to start reversing all the monetary accommodation in a quest to slow economic growth and to quell inflationary pressures. And that's why that's why you hike rates. These things don't work in isolation. You don't hike rates and just inflation comes down and everything else is fine. You hike rates to slow economic growth, you slow demand, and that brings inflation down. The question is now, that's also what declining markets do, which impact consumer confidence, restrict consumption, and has the same effect as tightening monetary policy. So now the question, kind of all eyes are from the financial markets are going to shift to the Fed. Are they going to start to focus on geopolitical risk? And this would not be the first time. I've actually got an article coming out tomorrow. Back in 2014, 2016, 2018, they were focusing on geopolitical risk in regards to their monetary policy. It was, kind of a line item statement in their FOMC as they came out, made their FOMC press conferences. Geopolitical risk kind of front and center. We're paying attention to that because it does impact not only domestic growth, but global growth as well. And this is certainly going to do that. So, what the markets are looking for now, what the markets need is they need any sense of relief to try to get some money put back into markets. Right now, the first reaction this morning, as we said in the last segment, is going to be to sell everything. That's going to be the first knee-jerk reaction this morning. This is the question is now is what happens next, and does the Fed start to reconsider fighting inflation now? Do they say, okay, you know what? I'm let inflation run hot for the time being because I need to focus on financial stability, or do I continue to fight that inflationary pressure? It's a really, really tough spot for the Federal Reserve right now. Mike, your thoughts?
Yeah, and I think the Fed is in our shoes to some degree. They don't know what's next either, right? They're waiting, and I think what we're all waiting on is what's the response? What are the consequences from the United States as well as Europe? How are they going to react? What are they going to? What kind of sanctions are they going to impose? Will they put troops in the area to start protecting Ukraine? And then the question is, how does Russia react to that? And this comes down to a question of escalation, and what point does escalation stop, or how far does escalation go? And the Fed does not have the answer to that. We don't have the answer to that. We don't know what Biden's thinking. We don't know what Europe's thinking, what NATO's thinking. And that's why the markets are selling off, because they don't know what's going on. So they're being protective. Investors are protective. So the Fed, they still have 3 weeks to go. Certainly geopolitics are big in their head now. They're not really thinking about what they're going to do because they still have 2 weeks to even start thinking about making that decision. They have been very quiet. What's interesting is normally this time of the cycle, the Fed meets every 6 weeks. When you start getting kind of 2-3 weeks out, they start chirping. the hawk's hawk, the dove's dove, and everyone wants to say their view, and here's what I think the Fed should do, and some people are saying they should do 50, others saying let's hold off, but they've all been very quiet, and probably on purpose. They don't want to commit, even though they kind of have committed. They don't want to further commit to raising rates by 25 or 50, or even raising rates or whatever they're going to do. QE will end in March, but maybe they'll extend it. They just don't want to be out there because they don't know what's going on. So to me, I think the biggest event of the next few hours is, what are the sanctions? How hard hitting are they? Because the sanctions haven't involved oil yet. Right. And when we start sanctioning oil, that hurts Russia a lot, but it hurts the rest of the world.
Well, and you're right. President Biden is set to make remarks today, so we'll start hearing about that, and about those sanctions in particular, because that's going to be the first thing that they're working on this morning. NATO, of course, is the most powerful military alliance in the world, and they have already stated in the coming days and weeks, this is a quote from General Jens Stoltenberg, in the coming days and weeks, we will further increase our presence in the eastern part of the alliance. We have already deployed thousands of troops, he said. The most important thing for Poland and allies in the eastern part of the NATO alliance is that there is more NATO presence in the east. Stoltenberg said the Russian attack was no surprise because, quote, that is exactly what our intelligence predicted over the last several months. Moscow was never serious about really engaging in diplomatic efforts. He goes on to state that this is extremely serious. It's a time of war on a scale that we actually thought of was history in Europe, and that it wouldn't happen again. It's imposing enormous suffering on the people in Ukraine. So NATO is, going to be applying again. This is that escalation part that is, very critical, and this is kind of that point to where NATO starts to escalate, Russia starts to escalate, we apply sanctions, and then everybody escalates more. This is where cooler heads have to step in and start to prevail, and they need to find a solution fairly quickly, to get things to start to reverse and to calm down here a bit. Because, again, this is, the big risk here is this continues to escalate until you're actually in a full-fledged war, and that's the last thing that, basically anybody wants right now.
And Lance, there's also discussions behind the scene. I know it sounds like we're not talking to Russia, that NATO's not talking to Russia, that Europe's not talking to Russia. There are discussions going on, and we don't know what Russia really wants. Do they want to take back all their old territories, or are they just using this to get something else, right? We've talked, a lot of the media has talked about Nord Stream 2, which is a gas pipeline to Germany. And Germany has not approved it, and Biden has been pretty much against it. It has been a huge investment for Russia to build that pipeline, and it's a huge revenue generator for Russia once they get it going. And now, in the same light, Germany is heavily dependent on oil. I think half their gas comes from Russia. So, is this, a very heavy-handed negotiation about Nord Stream and possibly some other items? Right. And, will the West relent and say, yep, finish Nord Stream, we'll permit it, Biden will give it the stamp of approval, so will NATO, and start pulling your troops out, or, just keep the eastern part of the Ukraine, but your advance stops there. That, right. That discussion could be going on. Or this could be that Russia just wants all of Ukraine, and that's a very different negotiation.
I don't think that's the issue. I mean, Biden had already given the stamp of approval on the finishing of Nord Stream. Now he's repealed that again. Of course, Trump was the one that had stopped it to start with, and then Biden had reversed that decision when he got into office, and now Biden has reversed that decision again, and is back to where Trump was originally on the deal. But, the big risk and really the big issue, and we've talked about this before, is that Russia doesn't want Ukraine being part of NATO. And that would put NATO troops directly on its doorstep, which are happening right now. But one of the big concerns for Russia has always been Ukraine being part of NATO. This could have been avoided to a large degree had they just agreed not to allow NATO to be part of Ukraine to be part of NATO. So, again, you're to your point, though, we don't know exactly what they want. And you're right, there's negotiations that are going on. Sanctions are going to be the next step. Escalation is going to follow. The question will be is when do cooler heads actually prevail? That's going to be the big question. All right, we'll come back. We'll wrap up the show. Again, lots of stuff happening this morning. Don't go away.
Daily investment news you can use. Delivered at the speed of the internet at realinvestmentadvice.com.
FAFSA. It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next Lunch and Learn on college planning and dealing with FAFSA season. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
What worries you about your money? Enhance your financial success with RIA Advisor's free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show. This morning is, of course, Thursday as we get to wrap things up. Again, this is going to be one of those mornings that, you just kind of wish you got to go back to bed and just start all over. But as we woke up this morning to headlines that Russia launches a full-scale invasion of Ukraine, the question becomes, again, what happens next? And, what happens politically? The last thing that anybody wants is to devolve back into war in Europe. We haven't seen that in this century and certainly not in decades since World War II. So, that's the last thing anybody wants. And the question is and Mike Lebowitz brought this point up in the last segment, what does he want, right? That's the question. What does he actually want? And those conversations are obviously going on behind the scenes, and there's some ask being made that right now the current NATO alliance is unwilling to agree to, and that has led up to this initial invasion into military sites. Now, again, according to earliest reports, and this is going to this is evolving as things go on. These attacks are on military sites, airstrips and airplanes and military facilities, et cetera, not civilian populations. Now, again, this may change, but that's what the headlines are reporting. But everybody's just playing catch up. Now, this started at 5 a.m. Eastern time. So everybody's playing catch up right now. We're just a couple hours into this trying to figure it out. And this is going to be, a developing situation all day long that's going to continue to weigh on markets. Putin's warning of consequences if there is interference with Russia. The U.S. is warning of consequences if he continues to do this. So, this is escalating at this point to, a worsening situation, and cooler heads need to prevail pretty quickly here if things are going to settle down. So again, we'll find out as this is going to occur. President Biden is going to speak this morning, though he is working with the G7 G7 countries right now to impose sanctions on on Russia. And, this is going to be the next step of escalation, right? Severe sanctions against Russia. Now, Russia will respond to those sanctions because sanctions are going to impact the population of Russia, right? Which is already economically weak anyway. This is going to make them even weaker at this point, which is going to cause more problems economically. So again, and there's ripple effects from all of this even to the U.S. economy. We're going to see gas prices going up here. Oil prices are up 8% this morning. Brent crude is over 100. We're about $95 a barrel on West Texas Intermediate crude. That's going to translate to higher gas prices at the pump. As we talked about a few minutes ago with the Federal Reserve is coming up with their meeting. Inflation has been their big focus, right? They are concerned about the 7% inflation run we've got going on. Used car prices are out of control. House prices are as high as they've been since World War II. Biggest spike in housing prices since World War II. And now they've got this geopolitical problem that is going to further cause inflationary pressures on American citizens, but is also going to undermine the economy in terms of slowing economic growth and creating other problems. And right now you've got financial instability going on with markets. So many conflicting and competing problems here for markets. It's going to make this very difficult to navigate here over the next few days. And as we said earlier, if there's nothing you can do about it this morning at the open, right? So what we're going to have to do is wait for the market to open, see what happens next, and then start reacting accordingly. Trying to do anything else, kind of a knee-jerk basis reaction, is probably going to be the wrong action. And this is going to be the problem that faces a lot of investors this morning. And so the best thing to do is just kind of shut off the trading terminal momentarily and let this thing kind of open, and then start figuring out where the damage is, where the damage isn't, and then just start making some small adjustments if you need to. Mike?
And Lance, I think, what you just said is, more primarily about risk assets. But what do we do about safe haven assets? What do we do with bonds? What do you do if you own gold or Bitcoin?
Right. Bitcoin's not a safe haven asset.
Not anymore. That's the other end. Well, let's talk about Bitcoin first. Bitcoin's down 10% today. Bitcoin has been trading poorly through this Russian, through the war drums with Russia for the last month, and it hasn't protected against inflation. So, we could save this debate for another day, but what is Bitcoin? And it's starting to look more and more like the NASDAQ, like a risk asset. But gold is the traditional safe haven. U.S. bonds are a relatively traditional safe haven, right? And bonds are having a great morning, but they were down sharply yesterday when the war drums were beating really hard, right? So it's not clear, like on the bond side, that bonds you're going to definitely make a ton of money, sell all your stocks, buy bonds, right? Because what we're seeing is can be potentially very inflationary, pushing inflation higher than it is now, which is not good for bonds. It may get the Fed to step on the sidelines, which may not be good for bonds. And bonds, have traded okay, but they haven't acted like the safe haven until this morning. Gold is having a great morning. It's up about $60. Call that 2.5%, 3%. But it too has traded, it's traded well for the last few weeks, but it's not acting like that's the place to be. That's the place to protect all your money. Oil has been trading well. But that oil is directly implicated into this because we don't know what the consequences are going to be on Russia. Will we prohibit them from selling the oil on the world markets? How will it affect all the other oil producers? So, you have to be careful on both sides of the balance sheet. And that's one reason why we increased our hedges over the last month, right? We sold some of those riskier assets. We actually put on some short equity hedges, and we've also been steadily increasing our exposure to bonds. And some of it is technical. Some of it is certainly fundamental with what the Fed's going to do. But, this Russia thing has also been kind of a known commodity now for, a month, 2 months. And that also plays into the rationale for being balanced or hedged or whatever you want to call it. And we're gonna have an interesting day today, but it's certainly easier to sleep knowing that you have some bonds on, knowing that you're not full throttle on risk assets, and it allows you to kind of think more logically and rationally. And Lance, we had a great conversation yesterday. After the market closed, we were talking for about 45 minutes. What are we going to do? Mm-hmm. And we went through so many different scenarios and how are we going to react? Are we going to buy? We're going to sell? We're going to do this? We're going to do that? And it's nice to be in a comfortable position to make those decisions and to have those thoughts versus being panicked and knowing that you're over your skis in one direction or another and having to react versus being able to just step back, right? And just survey the situation.
Yeah, and again, and that is true. And unfortunately, it's this is going to be the challenge for a lot of people is that, they're going to wake up this morning and go, oh my gosh, it's the emotional headline. I mean, this is very emotionally driven, charged headlines that we have going on right now. It's like, oh my gosh, what does this mean? We're going back to World War II and, this is going to spread throughout Europe and, he's got nuclear warheads and he's crazy and he'll use them. And, we can extrapolate this out into a very, very bad situation. And that's really the last thing that, look, Russia doesn't want war, right? They want something, but it's not war. And, NATO wants something, but it's not war. Nobody wants war out of this. And so you've got to hope, and at least trying to be optimistic here, is that we're going to find, some common ground to negotiate and calm the situation down sooner rather than later, right? And, and we've got some precedent for this, right? Russia went into the Ukraine back in 2014. In February of 2014, Russia invaded the Ukraine, and it lasted 2 months. And then it resolved itself, and we went on with life, and the market rallied and did well until later that year when we got into the whole Brexit issue. So, there's always something out there, right? But, these things historically tend to resolve themselves pretty quickly. So making big, bets in one direction or the other, it may work for a few days or even a couple of weeks, but they also have a tendency to reverse very quickly. And so you get onto this one-sided bet and you're going, oh, I'm right. And then this whole thing reverses and you're like, okay, yeah, but I'm still going to be right eventually. And then you wind up so far behind the curve at that point, you've created damage twice now. So sometimes it's better just to do nothing, just kind of wade through this. Markets aren't going to go just straight down forever. We are going to get a reflexive rally here at some point. You'll have a better opportunity to rebalance risk into. You'll also have a better understanding of what's going on. Again, by the time the market opens this morning, we'll be 3.5 hours into this event. We don't know anything right now. We're just reading headlines and relaying what the media is saying. So be careful about making any big decisions this morning. Let this market unfold. It's too late to do anything about it now. Let the market unfold and then start making rational decisions about your portfolio and your money as we go forward from here and as we learn more. Mike, thank you so much for joining us.
I would just like to say the media sells fear, and I don't care what side of the political aisle you're on. Be careful because they're all selling fear. There's fear all over Twitter, all over whatever your social media choice is. And don't let that fear drive your investment decisions. Let it be logic.
Yeah, absolutely. Mike, thanks so much this morning. Again, we have some commentary about this morning on our daily market commentary. It's on the website now, realinvestmentadvice.com. Our newsletter tomorrow be dedicated exclusively to what to do with your money and your portfolio. That'll be tomorrow's newsletter. Get subscribed at the website, realinvestmentadvice.com. See you back here tomorrow.
It's a rich man's world. It's a rich man's world.